Today I'm going to analyze these fixed assets. These fixed assets basically what they do is they signal the general health of the economy. Um, the first four, basically what they do is they signal the risk appetite of different of the economy. Oil is basically um measures the inflation rate. It's not clear um correlation, but it's kind of an indicator. Uh, S&P is more longer term. Investors how investors look at the general economy. A lot of people and institutions have and companies have um, stock investments, so it's kind of also a long-term wealth measure. Volatility index of S&P of Standard and Poor. Basically, the higher the volatility is, that means there's a lot of uncertainty. Obviously, beyond war now. The lower the volatility, then there's less stress in people's mind and the economy. So let's look at the different candles. Uh, my favorite indicator that I've tried a lot of indicators, and this is what I found to be useful for me. Of course, everybody has to use the indicator that they find useful. Um, the last candle is a big red candle. The previous one is also a red candle, but it has a large bottom wick, smaller but still sizable. Upper wick. And basically, the way I train myself is if a candle crosses either the body or the wick, but the, the, it's better if the body crosses it, but the wick also counts. If it crosses the 9 EMA, then the next candle, if it's still the same color, then I open a trade. It's kind of a reversal, kind of, you know. In case of wicks, on the daily chart, uh, it crosses here first, then it gaps down. Uh, a gap down or a gap up means there's a strong initial, at least initial opening sentiments. It can close the gap, but there's kind of a strong starting sentiment for the day. Uh, so it crossed here. And the next candle is a big red one with a huge body, small upper one, tiny, almost non-existent um bottom wick. Um, so it's on the daily chart at least, it's definitely bearish. Um, which means that the likelihood that the next candle is going to close below this level is higher than it could those closes above. Now this is the market is still open, so um a kind of a rule is if the candle itself hasn't closed, it's not the market hasn't closed, it's less of a strong signal than a um closed candle, but it still counts as useful in terms of determining where it might go the next day, or well, if at least day on the daily chart and the weekly or next week and so on. So this is definitely a bearish, which means that the volatility was down, which means that the risk appetite is going down, which means the market, at least in the S&P market, investors kind of think it's either they got used to the Iran conflict or they just kind of think it's gonna be solved soon or it's not or at least it's not gonna be as severe as people thought in the beginning. So I don't really use on the VIX. I don't use support and resistance. It's not really viable. At least I don't find it. It's more like the candle and the general chart patterns like triangle and stuff. They don't. I don't find them very useful either. So it's for the VIX. It's kind of the candles that count. But definitely, it could went up a little bit from the low. So I think the next day, tomorrow, it's going to close even lower, which is kind of good sign. DXY, the dollar index. The dollar index is a basket of different currencies against the US dollar. It's more of a short term indicator of how the different how risky people think it's going to be that the general economy is going to be. Uh, Again, daily chart is still open, so the, the signal itself is not as strong as a close candle, but let's see what it does. It's above, it's above the 9 EMA, exponential moving average. Uh, and the last candle is the red one, and the previous one is the green one. The one before that is also a green one, and if you see the second to the left, it would just jump up a huge amount. And the red is kind of in between. It opened um the opening and close price is in between the opening and close price is the green. So what that means is the bulls are still stronger than the red than the bear. Let's look at the wicks. The wick is kind of small on both candles. On this candle, it's the top one, the top wick is a little bit smaller than the bottom one, which means that at least on this candle, were e- the bears were even more powerful than the red than the bears. Um, Here this is an ongoing candle, so it's not closed. But the wicks are kind of the same in size, so yeah, it's a big candle, and um, but it's kind of inching down, so but it's still on towards the top of this candle. So based on that, I think tomorrow's candle is, and maybe in the next 2 or 3, if no geopolitical event happen, it's going to be kind of in this range somewhere here. Maybe a little bit above it, maybe a little down, but it's going to be, but I think it's going to be sideways for the next couple of days, or maybe for the whole week. So recap: volatility goes down, markets are not as nervous. Uh, and for the DXY, again, if it goes up, that means the dollar is getting stronger, which is a flight to safety kind of asset. And because it's going to likely be sideways, the markets haven't really decided if if there's going to be more risk or less risk, but the initial uh fear, it has kind of subsided a bit. Um, TLT is the 20-year US treasuries. Um, Basically, again, investors put their money in treasuries for the cash flow. Uh, Again, it's basically a safety kind of measure. Same thing, if it goes up, then there's high demand for the TLT, the US treasuries, which means um, they're looking for a safe asset. If it goes down, then they are selling the treasuries, US treasuries, which means that uh, they um, they have a little bit higher appetite for risk. They are not as concerned about the economy or market and so on. Yeah, so let's see the candles. 9 EMA goes down. So it's the general trend is down, which means that people are selling the US dollar, which means they are not as concerned about the economy or geopolitics or whatever. What? Let's see the last really 4 days. Let's start with this day. Well, 5 days now, because this candle here, you know, kept down, and it didn't close back up. Um, then the next candle, and it's a big one. It's a big candle with small wicks. So this is definitely bearish. This one, the bulls try to push it back up. If you can see, there's a huge candle on the top, a smaller candle, but still considerable candle, or a wick on the bottom, and a small body. And if you can see that the wick kind of crosses in the body of the candle, the previous candle. So what this means is there was a tiny bit of bullishness, but not really enough. It's more like a breather, than a reversal. Then the next candle is a red, huge candle on the top, small candle on the bottom, means it closed towards the bottom of the range of the day. It's definitely um bearish for this candle. Uh, then this third one, which is still open, which is again an open candle is not as strong as a closed candle, but it's still useful to see. Smaller candle or a considerable size candle, but smaller size wick than the bottom wick. Uh, the the body of the candle is more towards the top. And if you look at this whole candle, it's kind of in between this whole range. It's kind of moved back up to the bottom of this previous candle. It's kind of kept up a bit. So the bulls are a little bit more stronger than the bears now. Um, it's not a definitely bullish signal. Um, But if you look at this whole, there's tons of wicks here, which means that it's not neither the bulls, neither the bears really decided where to put their bets here. So let's look left of the chart for support and resistance. There's probably the range here is there's like this part here, then these candles here. Um, then there's this candle here. Uh, this candle here. So this is kind of like when you have a support that's not like a clear solid line, but more like a range, then it's weaker support than with a definite line. I'm just trying to look at a definite line. For example, uh, I don't really see any strong on this chart, but anyways, so look at all these charts here, or these candles here. There's a resistance here. Um, there's no, there's no real definite. Maybe there's a range here, or like here and here, like in terms of range, and also this here. But again, it's a wider range, which is not very strong on the resistance. Um, on the other hand, the 9 EMA is really strong support resistance, but it's too far away from it. So, in terms of TLT, mm, it could go all both ways. Since both this green and this green is kind of small, and I'm betting it's going to go sideways, but more on the bottom side. It's not likely that it should go like way down, but I think it should go back down to this range really. Well, actually, there's a support here. There's support here because it's this bottom of this candle, bottom of this candle. Um, so yeah, it's going to go down a little bit. I think it's going to be stopped somewhere here, well, up until here, and then it might actually close somewhere here. So in terms of TLT, it's a little bit bearish, but it's more like sideways to a bit bearish. So that means that because the demand for the US dollar is going down, it's less of a safety play. So markets are not as nervous. There's kind of a theme now. VIX um going down, less um less fear, um less riskiness here. It's going more sideways. TLT is more less less nervous, but to kind of people's or investors have this whole Iran situation in their mind, but they're kind of. My feeling is they are used to it. They are not. They don't think it's gonna be over or anything or gonna be resolved, but it's kind of they get used to it. Gold is more a long-term um flight to safety type of asset. Again, it's a type of asset where if it goes up, and it's also kind of a gauge of inflation fears. Um, here there's that gold had a huge rally here. Um, in terms of Elliott wave, one, two, three, four, five, and then instead of going A, B, C, D or sideways, it just right now. Um, let's see the last few candles. Nine period exponential moving down, average is down. Um, this candle's wick just kind of crosses crossed it, but it didn't really wasn't there was no conviction. This one is off. This whole downtrend, short-term downtrend started here when there was a red candle, there was crossed it, and this was where I would have put um a trade. I don't trade gold because there's assets that what I trade personally are assets and stocks and currencies and all that where in terms of in the past those positions most of the positions were profitable and everybody should do that. They should trade asset not based on what the news say but based on they should try a ton of different assets and pray those that they have success with. Uh, I'm I'm analyzing these charts just to have a general idea where the market and jitters in the people's minds are. So this is a candle that hasn't closed yet. Um, so there was a strong trend now. It started here, reversed. There's a huge body, smaller wicks. Like the wicks are way smaller than the body itself. Then it kept going down. Bulls tried to push it back up. They lost. There's a tiny bit of wick here. A bigger candle. It's kind of the same size as the body. Um, this is and the close itself is closer to the bottom. You know, meaning the bottom wick is smaller. That was a definitely bearish candle. This one again, it's still open, small body, big big wicks. No, I'm not. I don't trade based on chart patterns. In terms of like this is like a doji. I don't do that. I look at the patterns and all that because it's more useful than oh this is doji and you have to do this and that. So last candle, both tried to pull up. They weren't successful. Again, it's haven't closed yet. So there's still a strong downtrend here. There was an effort from the bull. Um, it seems like it's gonna fail, but at least there was an attempt by the bulls. Here, there was no attempt by the bulls. Um, that means what that means is the max candle, it's either gonna go up maybe somewhere here, but the I think it's more likely it's going to go down. Maybe it's gonna go sideways again for another 1 or 2 days, maybe 3 days, and then just go down. It seems to me that it's kind of starting a new elite wave, where you elite wave one, two, three, four, five. Um, so in the short term, it's definitely bearish, which means that the fear of inflation is going down people's mind. Let's look at the support and resistance. I think there's one here. And it's important resistance. The closer the touch of the support to the current price, the stronger. Um, there's one here. There's one here. Um, but let's see. There's one here. Actually, this is stronger because it touched here and it touched here. This one here is touched. Just these two touched it. These two touched it. Although wait a minute. There's one here. There's kind of small range here, so that's weaker support. Um, so in terms of resistance, yeah, this is kind of a strong one here. There's a resistance here. Um, support maybe here. A small one here. Yeah, it could go down to what 4900. Maybe then it takes a breather, and I think well, at least right now it seems like it's going to go down. Where it goes down, I think this is really the sport. The really sport here. Um, so I don't think it's going to go down to like half of the big rally. It's gonna stop in between somewhere like here, and then again take a breather. Maybe again, it's if it's a L8 wave, then it's going to maybe it goes down to this style here. But anyway, it's definitely bearish, which means there's less of an inflation in general market crash fears. And there's again, it's in line with the theme of the more shorter term um, assets. U.S. oil. U.S. oil is used for transporting everything, and there's tons of different chemicals that use oil. Um, so it's not just that transport. It's basically still our economy depends on oil. Expect the moving average goes up. Candles are way above it. There's a red candle here, engulfing that candle. Small body at the bottom, small body on the top, but somewhat bigger than the bottom one, which means it's more. It's definitely bearish. This is definitely bearish. Um, and there was like this candle just kept going up and up. Um, but the body of this candle, they kind of closed above it. Um, and this huge risk is a definite kind of some geopolitic or some fluke kind of. So this is not normal kind of trading or trading daily movement. Or and the subsequent candles are also huge. So they, yeah. Anyways, EMA is going up. Huge candle to the bottom, but still far away from the EMA. The bottom of the candle is somewhere what third of this candle. So my so what it seems to me is it's going to go down, and it's going to be somewhere going to stop. I mean, the next candle is going to stop somewhere here. At least this is what it looks like now. And then the EMA just gonna hold it up a bit. And but but this is definitely bearish for the next 1 day or 2 days. Um, and because it went down compared to this huge rally here, it was kind of an Elliott wave. One, two, three, four, five. Actually, if it's an Elliott wave, then it could go sideways in ABCD. Mm, but this one is too large of a candle here. So I think it's going to go down a bit. So that means that if there's no new development in the Iran war, um, or the whole situation with oil, then I think, or it seems to me that the next candle is going to go down, which, um, I mean, $90 here, you know, people kind of like whole numbers. So I think even though on the chart itself there's no support resistance here, I mean it went to the moon really. It's way above everything else. Let's zoom out a little bit, see if there's something. Actually, uh, oh, it's well, 2022 was kind of far back in the past, so mm, it looked like there's a support resistance here, but it's kind of weak because it's so far away in the past. Um, maybe there's one here, at least it's still way above. It's interesting actually that well, we are still in the beginning of the Iran war, but but this one, this is the Ukraine war. It's very interesting that the Ukraine war just got up way more than the Iran war. Um, yeah, there's kind of a support resistance here, which is more interesting for us because it kind of look at the horizontal line, kind of falls in between the topics of this whole debacle here, so to speak. Um, and the 9MA is also support which coincide. Let me go back to it. Um, well, it's kind of in the range, like this is kind of a range of support resistance which is weaker and it's way back in the past. Actually, let's move down to this kind of in in this area too, which is closer in terms of time, which was in 2023. Um, yeah, this looks like this whole part, this whole thing here is looks like a strong resistance, or is a strong support. Let's zoom back in, so it's kind of this part. So yeah, I think if it goes down, it kind of takes a breather at around 90 or 89 or something like that. This before there. But let's like up with the candle itself or the last few candles. So yeah, I think it's going to, at least it looks like it's going to go down and it's going to be holding down. Now, if its oil goes down, then it now it didn't cross the EMA, so there's no actual reversal. It looks more like a breather or just the finishing, ABCD of the Elliott wave. Um, so what this tells me is it's kind of more like taking a longer breather before it decides where to go next. But I think maybe next week it could go up because it's gonna be pushed up by the EMA. If it's not pushed up by the EMA, then it's gonna break down and it could go down. But but the next 1 or 2 days, maybe 3 days, I think it's gonna be somewhere in this range, which is a good sign because that means the general inflation fear is subsiding. It's kind of in line with everything else. before that the, the kind of the initial fear and shock kind of subsided. It's the negatives are still in people's mind, but it's kind of subsided a little bit, or they got used to it, or they become calmer about it. So yeah. And the last asset is SPX 500. Yeah, it's kind of going down here. There's like a strong resistance here. Strong support here. This is more clear chart than the resistance, the bearish ones here. let's zoom it in a bit more. EMA is going down. Um, let's look at. Now let's start here actually. This was a big candle. A large farm wick, smaller candle, a smaller wick, and it's with this two just kind of on the top. Bears kind of wanted to push it down, but they weren't really successful. At least not here. It was resistance here by the EMA. Big candles touched big wicks, touched with small bodies, and touched by the EMA, but also the top quarter of this huge green triangle. But then it gapped down, and the gap went continued gap going down. With there's no really candle, no wick on the top, small candle or small wick on the bottom, which means there was still kind of an indecision here because there's still both kind of pushing up a tiny bit from the bottom, but they were very successful at it. Um, so yeah, and then this one is a huge candle with up on the top and small one on the bottom, smaller than the body. So this goes towards the bottom of the day. This was definitely a bearish one. This one again, this is still unopened. Markets is not as close, not as strong as the closed ones. Wick, big wick on the top, small ones on the bottom, and the whole thing is green, which means that when this candle so far, the bulls are tiny bit stronger than the bears, but not by much really, because it's hovering on the what 3/4 on the bottom, and this body is kind of in between this body, this candle here, which is what a third of this um candle. So what this means to me, it signals to me, is that the bears kind of having a rest day, so to speak. Um, let's see. So based on these here, it could go sideways with more potential towards the bottom. I, it doesn't seem like a huge down candle, but for tomorrow, but I think it could go down this low. Um, let's look at support resistances. Let's see. Oh, no, there's definitely a strong resistance here in this area. It's kind of a range, not a different line. And it's not as strong, but but kind of a lot of candles kind of touched it. Both red candles and green candles here and here. So this area here is kind of strong one. Let's look at uh, lower support resistances. This kind of there's one kind of here. It's looks like a stronger one. It's kind of in the past, but not too much in the past. Uh, and and also these candles got further down and further up, so it's not as strong. Um, so yeah, I won't look at them as anything useful for us. Let's see somewhere that's below here to see where it might stop or at least take a breather. Um, this one looks like it, although these kind of caused it, but afterwards it's kind of, but with these kind of also caused it, so it's not as strong. Let's start from here. There's kind of a range here. Yeah, there's kind of a range here. It's also interesting that it's kind of the support of this green candle and another green candle where it acted as a resistance. So I think that this range here might be a strong stop to the bears here, stopping up here. Um, but going back to this one, should it go down? It could, definitely. Um, what the market sentiment here is, it's it's more like to the sideways, so to speak. It's sideways really. It's kind of a flag here, a bearish flag with downward. So it's definitely more bearish than bullish, but it's not overly bearish, so it's going to crash down. Let's see if there's an Elliott. There's no really a green Elliott wave. It's kind of there's one here. It just all the word play. Um, of course, there's no pre-sign now, so general candlestick patterns and chart patterns and all those work better in this time. When there's no geopolitical or economic or anything goes on in the world. Um, which we kind of saw that, back on the VIX, that, it's way up, way up. The volatility is way up. Although it's not as way up as, um, what, and then 25 or 24, which is interesting. I think this is due to the Russia war or Ukraine war. Yeah, yeah. So back to the S&P, I think it might go down a little bit, but it's more of a sideways play, I think. So all in all, um, I think based on all these charts, there's no the initial fears in the market subsided. Um, there's still there people are not calm about it. They're just kind of going sideways in terms of or undecided of what's going to happen next. But they're still have this bearish or negative outlook, but they don't have the fear anymore. So Those are the charts. Um, let's see what more things.